Let's talk about SoFi today, where we saw another wild ride on the stock market. I'll walk you through some key data points and what really drove today's action. Hello everyone, welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. SoFi ended the day down by 1.14%, but there was some recovery after hitting a low of 7.58 cents, bouncing off its 200-day moving average. We'll discuss more technicals toward the end of the video, but let's start with the trading volume. It was fairly high today, with 46.9 million shares traded compared to an average of 41.8 million. There were also some large transactions above $100,000 on the secondary market, mostly sells, which contributed to SoFi's early dip. For example, one trade of 1.67 million shares involved mostly selling, although a few buys occurred in between. It's hard to pinpoint what exactly is going on with institutional investors in SoFi. They don't seem to be too bullish right now, possibly because of weaker than expected housing data and consumer confidence. The Consumer Confidence Index came in at 98.7, lower than the forecast of 103.9, which created some uneasiness in the broader market. However, the market did start to recover slightly because negative data increases the likelihood of interest rate cuts. Looking ahead to the Federal Reserve meeting on November 7th, there's currently a 62.3% chance of a 50 basis point rate cut. There's also a chance we might see a total of 125 basis points of cuts in 2024, which could bode well for SoFi. Interestingly, there haven't been any new SEC filings or insider sales for SoFi, so there's nothing to suggest significant internal issues. Additionally, the short interest data released by Nasdaq on September 12th shows 186.59 million shares are being shorted, equating to 17.83%. According to platforms like Ortex, this short interest has dropped slightly, with the current estimate being around 17.31%. The good news is that shorts have been returning more shares than expected, about 12 million shares to be precise. It's unusual to see this trend with SoFi, where shorts are returning shares while other heavily shorted stocks like Lucid are seeing increased shorting activity. SoFi's utilization rate for borrowing shares to short is 45.4%, while the cost to borrow has dropped to 0.61%, making it relatively cheap for short sellers to bet against SoFi. Despite the recent selling pressure, there's optimism that SoFi could see a rally if the upcoming earnings report delivers positive results. Looking at the options market, there was $7.52 million in call options traded today compared to $2.46 million in puts, indicating that a lot of money is being placed on SoFi's potential to rise. About 48% of all options activity today was bullish, targeting a price range of $8 to $8.50. On the bearish side, there's a consensus that SoFi could drop below 7.50 cents, so the stock is at a crucial pivot point. Right now, SoFi is trading between a support level, S1 of $7.83, and resistance at $8.07. The stock didn't quite reach that resistance level today, but the technicals suggest more consolidation could be coming. SoFi is holding around its 200-day moving average, and if it dips below that, we could see further downside. However, if it bounces back up from around 7.35, which is where its 50-day moving average sits, we might get a rally ahead of earnings. A few key economic data points are coming up that could affect SoFi, including the GDP report on Thursday and the Personal Consumption Expenditures (PCE) report on Friday. Retail investors haven't been as active in SoFi lately, with institutional sellers driving most of the recent price action. Retail has been buying more frequently, but in smaller amounts. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.